Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's take a look at the headlines this afternoon. Firm trade on the Lal Street. Nifty trades above the 10,100 mark. Broader markets outperform.
Bharti Airtel is the top Nifty gainer today after it inks a deal with Tata Teleservices to take over its consumer mobile business.
TCS trades higher after the country's largest IT outsourcer posts a stable set of numbers in the second quarter.
Watch out for refining margins and Jio's numbers when Reliance Industries comes out with its second quarter numbers today.
Also on the show today, we discussed the rising competition in the telecom sector with Sajit Mangat and Andy Mukherjee. We will also get a voice in from Prayesh Jain on what he expects from the oil and gas side of Reliance, although Jio may be in focus when those earnings come in today.
But first, let's take a look at how the markets are faring at this hour. We've begun earnings season. RIL is what we're watching out for. What's the street watching out? Neeraj?
What the street is watching out for is new all-time highs. I don't know if we hit them today or no. But if indeed Reliance results were to have come out during market hours, maybe we would have, because the market expects some big bang numbers from Reliance, Harsha, 12%, 13% going into these results. So that is one thing. But having said that, I think we are in decent shape today for the markets, close to 10,160 odds, so about sniffing distance of all-time highs, which is good going. But hey, what's changed? Aside of the fact that the Bharti twins are contributing to it and all of that, I think the last 2 or 3 sessions, what's changed is banks are participating. And you need banks to participate for the markets to go up. So they've been doing that for the last 2 sessions. In today's session as well, private banks, HDFC Bank, ICICI, etc., are all participating, and they are putting in their hand, and therefore that is leading the markets to do what it is doing. So good going there. As I said, Bharti Infratel or the Bharti twins have done very well. The only thing that I'm particularly upset about is that I had thought that cap good companies could probably make a bit of a comeback in today's session of sorts after IIP numbers. That hasn't quite happened. So that is one space that is missing. But mid caps active, large caps active, banks active. Just look at the gains. Shriram EPC won an order 15%. Rain Industries 9% up today. It's actually gained 4x in the last 1.5 years. HEG, the stock is seeing no sunset ever since that one note from Jefferies came out. Suddenly the market stood up and took notice that, hey, there is something happening in these companies. Go out and buy them. And the stocks keep on running up. So
this is the graphite company.
Yeah. So the Graphite India and HEG, both of them on the common note that came out. There's just no going back. So mid caps, small caps really going up. But watch out for 10,179, 20 points away from those all-time high levels.
Okay, while we are at these levels, I just pulled out one chart from the terminal for you, Neeraj. Sensex is trading at about 20.9 times estimated earnings, which is the highest since 2010. But here's the interesting comparison. The white line is the MSCI India Index. That's marginally higher, or in fact on par with the MSCI Emerging Market Index. That's significant because that gives you a sense of how much we have run up in such a short time, despite the volatility.
Yeah, and if you look at across the EM space as well, aside of LATAM, wherein value markets have made a bit of a comeback, across the EM pack, it is growth markets. India for sure is a growth market. So growth market across the EM pack are getting rewarded. There is no pullback. And hey, when the mother market is doing so well, the rising tide carrying everybody along with it, probably little reason despite those growth hiccups for markets to correct, despite the fact that money is being pulled out. The last 2 months, we have to admit that FIs have pulled out money left, right, center, but we've sustained.
Here's another chart for you guys. So you think equity markets are the only things that are hitting record highs and you're all thrilled about it. Take a look at the Bitcoin chart. It hit record high yesterday. It's continued to push up beyond those $5,000 marks this morning as well. And just a couple of facts out there. It's not just the actual price of the Bitcoin which is rising. Interest is on the rise as well. The value of daily Bitcoin transactions has climbed to over $1 billion this year. That's up more than 300%.
Jamie Dimon is not talking about the Bitcoin anymore. He's obviously said he's not talking about it. The Bitcoin
There's
is
a
up
lovely debate
$5,000.
going on between Lloyd Blankfield and Jamie Dimon on the Bitcoin, but we won't dwell on it. Thanks
guys. Let's get to the big story of the day. Advent of Jio has changed the competitive landscape of India's telecom industry. Incumbent market leaders are looking to consolidate and increase the scale of their operations. In the latest move, Airtel will take over Tata Group's mobile services business that we heard yesterday. On one hand, this gives them more firepower to Airtel to battle with competition. On the other, the Tatas will be saved from having to close down Tata Tele. What does this mean for both parties and for the industry as a whole? We join in the studio by Sajid Mangat here in Mumbai. Andy Mukherjee from Bloomberg Gadfly joins us from Hong Kong. Guys, thank you so much for joining us. Sajid, let's start with you. This should come as a relief for the Tatas.
That's right. If you look at from a Tata Tele point of view, and we spoke to Saurabh Agarwal, who's a group CFO yesterday. He very categorically said that we're going to save roughly around 7,000 to 8,000 crores in closure costs, and that was more significant than the amount we will be pumping into the capital for Tata Tele to survive that. Chandra is already on record that it needs 50 to 60,000 crores of fund infusion for this telecom business to work. And Saurabh was very categorical in saying that we lost out the plot the moment we went down the ranking, and we were behind the curve on technology. We lost GSM. We weren't able to infuse money. Then Docomo came. There was fund crunch, and we just it became a logical step to exit the business, either shut down or sell. And that's what he said in the interview which he gave to us yesterday evening, that it makes perfect sense for us to go and give the entire consumer telecom business to Bharti and let them take care of it. And we will save 7,000 to 8,000 crores of capital that can be used for elsewhere in the business.
Okay, I just want to sort of shift this conversation a little bit and get Andy into this conversation as well. Andy, thanks for joining in first. Second is Saurabh Agarwal, brought in as this marquee banker into the group. Talk me through how you see this, a big feather in his cap to frankly get rid of this business?
Oh, absolutely. In fact, looking at all that he has achieved in this very short period of time, one is forced to wonder why the Tata Group did not have a group CFO for 5 years, 5 long years. So that is actually a mystery whose answer is probably with Mr. Cyrus Mistry. But yes, Mr. Agarwal has, I mean, look at, first the Tata Steel Europe deal, which, talks had been going on for more than a year. And finally, the marriage did get solemnized, and the cost savings that they are talking about there in Tata Steel Europe are going to offset something like 1/6 of Tata Steel's debt, and Tata Steel's debt, as we know, is a big worry for the entire group. Which today has more than about $21 billion in net debt. So deleveraging is moving forward at a rapid clip with Mr. Agarwal coming to the group, and that's a very heartening sign. The deal that went through last night. So with now, Bharti is of course not taking over the legacy debt. But even the fact that at the group level they are talking about making the creditors whole by getting an equity infusion from Tata Sons, which is what Mr. Agarwal told Sajid in an interview last evening, I believe. Now that's also a very heartening development. So I think bankers are going to be very relieved this Diwali that here is Tata Group, which is saying that they are going to bring in equity to make them whole. So yeah, they will have a good Diwali. Let's spare a thought for the 3,000 odd employees of Tata Tele who are going to get now transferred with the business to Bharti, and well, it's unclear if all of them will have jobs because they are talking about some rationalization.
Right.
But if even some jobs can be saved, that's also a good thing.
Okay, I'm going to have one question to both you and Sajid, and Andy, I'll start with you. What does this mean to the entire consolidation story that's taking place in the telecom space? Just a short while ago, you spoke about the fact that it'll be good if this comes down to 4 players in the industry. It already has, if we include the government, that is. Who will survive? Who's the fittest to survive?
Sorry, is that to Sajid or to me?
That's to you.
Okay. So yeah, it's now very clear, right? I mean, the four, including BSNL, who are going to survive, that list is now no longer in any doubt. So actually the big question now is how soon is it that we are going to see Reliance Jio and Bharti and Idea slugging it out for pole position. I think that is going to be the next step in that fight. But otherwise, the short list is now quite well known. But recall something that I had written some time back, that here Jio's entire strategy is going to be to emerge as the Verizon of India. So it's really going to push the market in a direction where it's going to be almost like a winner take all kind of a situation. So it's going to aim for an extremely high market share so that it can get the kind of EBITDA kick which is going to make all that $30 billion of investment. It's not a small amount, that all that $30 billion of investment worth its while.
Sajid?
The biggest challenge for all the three players would be to ensure that they get 50% of EBITDA margins, which I think Bharti enjoys in some of the key circles today. And yesterday when I spoke to Saurav Agarwal, he also echoed the same thought, saying that anyone who is able to reach to a lead pole position in a particular circle will ensure that he'll get a 50% margin. Anyone below that will have to manage with a 15% margin. If your revenue market share is less than 10%, you will end up in losses. So that would be the key thing. With four players in the market, you will have each one trying to get a revenue market share. It's not a subscriber market share which is going to take care of it, because you will have a lot of base level subscribers coming into all entire thing.
So revenue market share
is going to be the most significant. And in the last 3 or 4 quarters, even though Jio has been putting in all these schemes and everything, Bharti has managed to increase its revenue market share in every quarter. So that is something which is key there. How are you going to break that? And with Tata Tele coming in with an ARPU of 162 as per Edelweiss report, it's a healthy ARPU, even better than what Idea and Vodafone has. So it's going to be a big challenge for Jio and other players to ensure that they get a pole position in various circles. So Bharti is playing its game very well in terms of to ensure that it doesn't lose that position, so that its margins come down below 50%.
All right, gentlemen, thank you so much, Sajid, Andy, for giving us all the details on that big story. And if you want to read more, read Saurabh Agarwal's interview, go to BloombergQuint.com. We've got all of those stories. Andy's piece is up there. Sajid's interview with the management is up there as well. So go check that out. All right, we're sticking with the Tatas, the conglomerate's cash cow. TCS posted a decent set of numbers. The stock is trading about 1% or so higher. What verticals performed in line? What did better than expected? And what does the management have to say about what lies ahead? Agam Vakil is here with us to get us all those details. Agam.
Well, a 1.7% quarter-on-quarter constant currency growth for TCS is perhaps a tad below expectations. But let's break these revenues down in terms of segments, and let's also see what the management has said about these segments. I'm going to start off with its most important one, BFSI, and about 40% of the revenues come from this particular segment, and we've seen about a 3.7% growth here. But what the management has had to say about this is that they're past the fear of fintech disrupting traditional financial services, and while there isn't a lot of visibility, they are still partnering with a lot of their clients in order to come up with new models and eventually come up with identify a successful model which can help them. Of course, Diligenta has also done very well for them, and it continues to see momentum. Moving on to another rather crucial segment is the retail one. Again, about good 17% of your revenues come from this particular segment. Now, we've seen a lot of weakness over the past couple of quarters, and this time around too there has been a constant currency decline for this particular segment. However, the management says that the segment has bottomed out and you will eventually start seeing improvement gradually. Of course, the other segment is also communications and media. That's shown some consistency. It's seen about a 4.5% growth. But perhaps the more important question is, how does TCS position itself when it comes to digital services. Do remember about a good fifth of its revenues come from this area. The answer to that one, at least as per the management, is that it is going to be across all segments and it is going to be all encompassing. So on the whole, while they have missed expectations when it comes to the top line, they are fairly constructive and very positive when it comes to its outlook.
Thanks, Agam, for that. Take a look at what's happening in the markets at this point in time. Bring up the Nifty chart and tell you we're inching towards the all-time high of 10,178, 173 at this point, about 5 points away from an all-time high. That's where we are. The mood on the market clearly is towards early Diwali at this point in time. But let's also talk about from India's second largest listed entity to the largest one, RIL. And now the telecom giant as well, that they will be reporting earnings today. Sumit is standing by with all those expectations. A good quarter is expected, Sumit. And while I toss to Sumit, also keep a tab on where the Nifty is. Sumit.
So I will start. I'll start with the first important number, that is the gross refining margin. Now, Reliance Industries' gross refining margin is expected to come in at $12.5 per barrel, which is not only up 5% compared to last quarter, but will also be at its 8-year high. Now, in the second quarter of financial year 2009, the company clocked a GRM of around $13.4 per barrel. Now, this is because the Singapore GRM, that is the Asian benchmark, also rose 30% up 30% in this quarter to $8.3 per barrel. Now, overall, the standalone revenue of Reliance is expected to rise 12%, which will be the highest in the last 9 quarters. Net profit will rise by 6% and EBITDA will grow by around 10%. Now, Petchem business, which has been the star for Reliance in the last few quarters, will be a key thing to watch out for. The business is expected to report good, steady numbers on the back of higher volumes. Now, Reliance Industries has been surprising the street by posting better than expected net profit numbers for 8 consecutive quarters. Will it do it again? We'll have to wait and watch for that.
All right, Sumit, thanks so much for that. That's Reliance Industries, and I suspect that there would be some perhaps boost to the market if Reliance Industries also surprises to the upside. Sumit is also looking at what would happen or what we can gauge about the telecom business from here on. Sumit, Jio, will we get any more detail on how that business is doing financially?
Now, Reliance is expected to come out with the Reliance Jio numbers in this quarter. Now, if they declare their numbers, then top line will be the foremost number to watch out for. And we'll also have to see the exact date from when it has started recognizing these revenues. Now, along with the top line, we'll also have to watch out how much Reliance Jio garnered from every customer per month. That is the average revenue per user. Now, when it comes to ARPU, where does it stand amongst peers like Airtel, Vodafone, and Idea? We'll also have to watch that. In the last quarter, that is in the first quarter of financial year 2018, Airtel, that is a top player, reported an ARPU of 154. Now, the third important number to watch out for will be EBITDA, which will also indicate how good the company has been operating. Now, we'll have to see whether it comes out with a loss or a profit in the EBITDA front, and how big that loss or profit is, because that will anyways impact the company's consolidated numbers.
All right, Sumit, thanks so much for that. So Jio, of course, will be prime headline grabbing, but the earnings of the oil and gas business equally important. Prayesh Jain, Associate Vice President at IIFL Wealth Management, is joining us on the phone line for his own expectations. Prayesh, good afternoon. Thanks for coming in. What are your numbers looking like in terms of what you expect, particularly on GRMs?
For GRMs, you're expecting around $12.5 per barrel, and with an upward bias to that number. And I think the company will continue to outperform the Singapore benchmarks. The kind of momentum we've seen in product crack spreads, I think there is an upside bias to this $12.5 per barrel estimate, which could possibly be a surprise in the numbers.
Okay. Beyond the GRMs, Prayesh, on the oil and gas side, what would you be looking out for?
The petchem business should do decently with volumes increasing, and we expect the absolute profit number to be flat, a bit to be flat on a sequential basis, at closer to around 4,000 odd crores. We expect that to be flattish. And on the oil and gas business, the E&P, I think they'll continue to do some ground and report a bit loss for the E&P business.
What about Jio? It's been hogging the headlines. What kind of numbers are you anticipating?
That's a black box actually. We're not working with any estimates on a quarterly basis because from which day that would be accounted, and so that's the reason. In fact, we've not built in any consolidated estimates for Reliance this quarter.
Okay.
And we would look for the actual numbers and then possibly rework our numbers. For the
Okay.
year.
Okay. One final question, Prayesh, and this is with respect to their own EBITDA. Are there any specific numbers that you've penciled in? What would you like to hear from the company today?
I didn't get the question.
What numbers have you penciled for their EBITDA, and what would you like to hear from the company today?
See, in terms of EBITDA, we are working with something like 12,000 odd crores, 12,312 crore to be precise. And with regards to commentary, we would like to hear from the management about the key timelines for that there have been some delays on the commencement of new projects, plus also details on Geo, and what kind of further profitability trends we can see with regards to both the core business. Those are the key things we would look out from the management, and also how would it be pairing their debt going ahead and utilizing the cash flows which would be coming from their new project.
Prayesh, we'll leave it there. Many thanks indeed for joining us. That's Prayesh Jain from IIFL talking about Reliance Industries numbers. Broad expectation on the street that this quarter, the numbers should be pretty decent. Watch out for that stock. Also, watch out for what's going on the Nifty. The Nifty is, again, about 5 points away from that all-time record high of 10,178. We are inching towards that. But let's shift focus and talk about the broader economy. There may be some reason to cheer on the economy front. Industrial production in India saw a significant pickup in August. Retail inflation holds steady below the central bank's medium-term target. So is it all turning around? Are the fundamentals turning around? Or is it just a flash in the pan? Ira is standing by with some analysis. How do you read into these numbers, Ira? Should we look at this as a trend bounce back, or is this one-off?
So I think, Harsha, we are not inching towards record highs on the economy, that's for sure. But we are looking a little bit better than the negative sentiment was suggesting. And remember, that sentiment had sort of troughed when we got that 5.7% GDP number. Since then, and this is the monthly set of data, not just the IIP numbers, but the monthly set of high-frequency indicators, they're telling you that the picture may not be as bad as some had suggested. The lead number on that front is the IIP number, which came in yesterday, and at 4.3%, IIP was certainly better than what most people had expected. A lot of the upside came in from core sectors. Mining in particular was strong, and you also had strength in manufacturing returning. So, mining was strong, electricity was strong, manufacturing, which had been negative for a couple of quarters, had come back into positive. And also, if you break it up in the other, use-based classification, consumer durables saw positive growth after 2 months of negative growth. Consumer non-durable growth picked up to 7%. So the IIP number, in short, was strong no matter which way you sliced and diced it. You could question whether this was a restocking effect or a pre-festive season effect. The answer to that will only come in subsequent data months. But the other data points this month have also not looked bad. So if you look at, for instance, the vehicle sales numbers, the passenger vehicle sales have been strong more or less all along. But commercial vehicles, and look at this 3-month number, have strengthened. 25% growth in commercial vehicles is nothing to be sneezed at all. On the survey-based indicators, the PMI numbers, slight sort of mix there, with the manufacturing PMI remaining flat this month, but the services PMI coming back into expansion territory. Important because the Reserve Bank of India is betting on services and agriculture to take us up in terms of GDP growth in the second half of the year. On the inflation front, things are, I think, steady, status quo. 3.28 is the number that you got for September. The August number was revised as well, and that's at 3.28. So while you have started to see a pickup in inflation, it's not like you're seeing runaway inflation. So, it's a decent mix right now where growth, if it continues to pick up, and inflation, if it remains steady, is something that the central bank would be happy to see. One last indicator I want to point out, there's been a lot said about the fact that credit growth has been very, very weak. And even now you see a lot of articles saying that credit growth continues to be at multi-decade lows. But I would like to point out that if you look at this chart on credit growth, even that has started to inch higher. Some of it is working capital demand, yes, but it needs to be taken note of. Harsha.
Okay, Ira, very quickly, so how do you think the Reserve Bank of India is looking at this? Inflation has has steadied. You are seeing some pickup in growth, at least whatever data point that you've alluded to. Third, you're also saying that credit offtake is looking slightly, I mean, some signs of picking up. How would the RBI look at this equation?
The cop-out is it's going to remain data dependent.
Yep.
But I think the serious answer to that is that in December, there is still a small probability of a rate cut. And I think there are some brokerage houses that are saying that. I think that is contingent upon inflation remaining soft and actually, growth not picking up from current levels. So if they think that the output gap is negative and is widening in terms of its, sort of negative balance between potential output and real output, and inflation is soft, maybe they will pull the trigger one more time. But it's not a certainty by any means.
Okay, let's throw in another indicator of a possible economic recovery, and that would be consumption demand. And as we head into Diwali, appliance makers and retailers are offering cheap credit to boost festival sales, it seems. Charlene D'Souza is on the ground getting a sense of how this festival season is shaping up for some of those players. Charlene, how is it looking?
Yeah, so people are definitely buying this Diwali, but it's only after they've taken a small bridge loan. Now, consumer durable manufacturers have already witnessed a double-digit rise in sales, and they expect this momentum to continue even during Diwali. Even retailers say that they have seen a rise in sale. Now, last year, only 5% of the products were available on a zero down payment EMI, while this year, retailers are pushing to tie up with lenders to offer at least 70% of their products on a zero down payment EMI option. And customers now, 5 years back, only 15% of the customers opted for the EMI option, whereas now 50% of the customers are opting to buy their gadgets on a 50% on an EMI option. However, this is not the case with apparels. Expensive apparels are actually not doing too well, but consumers are opting for cheaper apparel, and Future Retail, which plays in that segment, expects its growth to be in double digits due to this.
Charlene, I know you're currently focusing on what's happening on the ground at some of these brick and mortar retailers, but I also know that you have your finger on the pulse across the industry. So tell me what the competition or the competitive forces between online and offline this time around are. Is offline brick and mortar retailers having to offer discounts to match the online guys to ensure that volumes remain high? What's the buzz around that?
So basically, that is not really happening. They have offered discounts, but they are definitely not as high as what was offered online. There are a lot of freebies that have been given this time round, and because customers are opting for this EMI option, they are anyways witnessing a 10 to 15% rise in sales.
Charlene, we'll leave it there. Many thanks indeed for joining us. That's festive season check on the ground. Out of time on lunch. Thank you so much for joining us.
Coming up next, a special show taking Citi Research's view on second quarter earnings. That's up at 2, I believe.
Are we live?